Welcome back. As I said, we're still talking issues with regards to commodities. Okpeyemi Oguntade joins me now. Okpeyemi, good morning to you. Thank you for coming on the show.
Good morning.
So, oil prices have recovered slightly. We see Brent crude up about 6.98% to about $45.80 per barrel. What is responsible for this?
Well, if you're looking at what really happened at the oil market throughout this week, we've had ups and downs in the oil market, starting from the Doha meeting, which didn't yield any fruitful outcome. And on Monday, we heard about the Kuwait strike that led to a significant drop in their production levels from about close to 3 million barrels to 1.1 million barrels. And then on Wednesday, what we had was the US crude stockpiles increased by 2.05 million barrels. It increased, but it was lower than what most analysts projected, which was about 3.1 million barrels. And then this morning, we get a report from the IEA saying that they expect US crude production to fall significantly in 2016 to 8.6 million barrels, and even fall lower to 8 million barrels in 2017. Currently, US production is about 8.95 million barrels. This is below the mark of 9 million barrels that they had from last year. So this news about the significant reduction in the expectation of a significant reduction in US crude production is what led to the upsurge we're seeing in prices this morning.
Well, now the International Energy Agency is predicting that non-OPEC production would record the biggest fall this year. How does this forecast rebalance the oversupplied market?
Well, if you're looking at what's happening in the market, right, we have an oversupplied market, and the oversupply is coming from mostly the non-OPEC producers, being the US. And IEA has said they expect production from non-OPEC to fall by about 750,000 barrels this year. And so 750,000 barrels this year. And so in that sense, what we currently have is we have a supply, or rather a demand deficit of about 2 million barrels currently in terms of world supply and world demand, because world supply is about 96 million barrels and world demand is about 94. And so if we're having an expectation of a decline in production by about 750, it means that we're having a contraction in that excess supply spread. So this as well contributed to the upsurge we're seeing in the crude energy market.
But then the IEA is also saying that low oil prices have cut investment by about 40%. Now, do you think that there are any plans by oil exporting countries to invest more into the market?
Well, at the end of the day, investments usually, because of the capital nature of extracting oil as well as refining oil and all that, at the end of the day, you have to go to the bank to get this money. And most banks are getting scared that they might have they might have an increasing level of their non-performing loans. And so in that sense, banks are a bit skeptical about giving out loans to oil producers. If you're looking at US shale producers, for 1/3 of the US shale producers are already filing for bankruptcy. So in this sense, it's no surprise that investment in that sector is going down, because most banks would probably not lend money, especially in this difficult times when we're seeing a slowdown in the global economy.
So what next for those oil companies? Because if the banks are not giving you any money, how do you fund your operations?
Like, for instance, if you look at Russia's oil and gas industry is largely controlled by the major oil producers in that segment. And what most producers would like to do is to increase production to make up for the shortfall in prices, to be able to take care of their expenditure. And it's surprising because a few days after the Doha meeting, Russians are coming out to say, okay, they might have to increase production to 12 million barrels per day. And Iraq is coming out and say, okay, you know what, maybe there will be another meeting in May to discuss this output freeze again ahead of the OPEC meeting in June. So for all producers at this point, they have two options. They either cut down on production and hope that prices will rebound to take care of their expenditures as well as pay up for their loans, or they increase production to make up for the decline in oil prices.
And in all of this, how are investors supposed to price this in? Because the market sometimes definitely reacts to all of these comments coming out from either the IEA or the OPEC countries. But how do you think they are going to price this in? Do you think they're just going to, it's just going to be like water on the back of a duck, shake it off and move on?
Well, at the end of the day, we investors, you're looking at the long-term view for the energy market. So far, so good. It's been very volatile this month, and But if you're looking at it in a long spread, like year to date for Brent crude has recovered about 23%. Year to date, prices are up 23%. And obviously, as an investor, if you see that, then it gives you this joy that maybe there is some kind of bright side to this story, and maybe towards the end you'd see another increase or a further increase in prices. And with the IEA coming out to say that they expect production to come down from the non-OPEC producers, then that's good news for investors.
Thank you so much, Okwemi, for coming on the program and sharing your
perspectives
with us. Well, Business Morning continues in just a moment. Stay with us.